right, so tonight we're going to talk about your home as an asset. So we're going to explore some myths versus facts. So the first one is that you must have a 20% down payment to buy a home. This is a myth that a lot of people think. A VA loan typically has no down payment, but a conventional loan can have as little as 3% down, with an FHA having as little as 3.5% down. So a 20% down payment is not required. The next one is FHA loans are only for first-time home buyers. This is also a myth. FHA loans are usually used for borrowers with a lower credit score, but can also be used with borrowers that have higher credit scores if the mortgage insurance factor is lower than a conventional loan. So on a conventional loan, we can shop the mortgage insurance based on the total package, like your credit scores, your loan to value, and so we can figure out if that is a better option for you versus the FHA, but it does not have to be a first-time home buyer. Your credit must be perfect to qualify for a mortgage. That is also another myth. Typically, a 620 middle credit score is required, but there are instances that a lower credit score can happen. It also, if there is a lower score than that, the whole thing has to make sense, and we have to be able to run it through an automated system and be able to get an accept for that. But typically, a 620 middle credit score is what we're looking for. Sellers can help pay a buyer's closing cost. This is a fact. In this market, sellers are typically paying some but not all closing costs, and there are grants that are available for those that qualify. You should avoid making big purchases before closing on a home. This is an absolute fact. You do not want to buy a new car for the driveway or a house full of furniture that you're going to put into this house. You do not want to open up a lot of credit prior to purchasing a home. None of that looks good. So you want to make sure that you make your bigger purchase first, which is the home. And then after you close on that, you can add the other things that you want to. Getting pre-approved can make your offer stronger. This is also a fact. This is the correct way to purchase a home. You need to know what you qualify before you look. Your realtor will have a letter to make that offer is always best. You don't want to go out looking and fall in love with something, and then when you talk to the lender, you realize that what you thought you wanted to purchase is not necessarily the price of the mortgage payment that you want. So you want to make sure that those things align with what you need and your budget. So who are we and what do we offer? So we are a local licensed mortgage lending company. Tidewater Home Funding has been helping neighbors across Virginia, North Carolina, and Florida since 2000. All of our processing, underwriting, loan closing, and funding, everything happens locally and in-house out of our corporate office in Chesapeake, Virginia, enabling our team to provide the utmost customer service. We believe in education, obviously, because we're here tonight. Whether you're a first-time home buyer or a seasoned buyer, we have plenty of resources available. And we are committed to delivering the exceptional mortgage experience and taking the time to listen to your story, your unique needs before we propose what you would qualify for. Here's just a list of some of these loan programs that we offer. I'm not going to read over all of them, but you can see we have everything. The majority that you're looking for are FHA, VA, or conventional. Jumbo options, of course, are the larger sales prices. Lori will talk to you a little bit later about renovation financing. We do reverse mortgages, and we have all types of properties like manufactured housing. We have fixed rate, ARMs, non-QM, which are qualified mortgages. I'll talk about those in just a little bit. And then you can read the right side of the page, everything from the first-time home buyer to the seasoned buyer buying investment and second homes. So let's talk about some grants. These are through Virginia Housing Development Authority, or the shorter term is called VHDA. There are down payment grants available for an FHA and a conventional loan. This is where you as the borrower will bring 1% of the sales price, and then the VHDA will grant you the other 2 or 2.5% towards the down payment. So for example, if you're looking to purchase a $250,000 house, 1% is $2,500. And then if you're doing a VA loan, there is no down payment required for a first-time home buyer. And so they give you a closing cost grant of 2% of the sales price. So these are the grants that are available through VHDA or Virginia Housing. And they do obviously have to be purchased in the state of Virginia since it's Virginia Housing. Now, these are also grants that we have the ability to get for you through the Federal Home Loan Bank because we are affiliated with the bank. The First Time Home Buyer Program, this is access to up to $17,500 to assist you. It first pays the closing cost and then the remainder can go towards the down payment. It has to meet household income requirements. So even if you have someone else in the house that is not going on the loan, if they make any income, we have to count that household income towards the grant to make sure that you don't exceed what is allowed for your family size and income. You just have to contribute at least $1,000 towards the home purchase. This grant can only be used for a primary residence, and you have to complete education through a HUD counselor that would do this over the phone counseling for you. The other grant that they also offer is what's called Community Partners Program. This is up to $20,000. Again, used towards closing cost and or down payment. A community partner is an educator, a healthcare worker, a firefighter, first responder, a veteran, or active duty in the military, or their living spouse who is purchasing the home. And when you think about educator, healthcare worker, firefighter, think about anyone who works in those buildings. So it doesn't necessarily have to be the teacher or the nurse. I have done this grant for someone who did IT for the police department. So as long as they work inside the building, then they qualify. Also bus drivers, anything like that. So just think about who works for those organizations. Again, it's household income, meeting the household requirement. You have to contribute at least $1,000, has to be a primary residence. And this particular one, you must meet income that is less than or equal to 80% of the median income. So we're going to look that up for you in the area that you're purchasing to make sure that your income qualifies for that. And this also requires you to do HUD counseling over the phone once that grant has been approved. And then lastly, the Workforce Housing Plus program. This is also a grant up to $15,000 towards closing cost or down payment. And these are for people who are over 80% median income, so 80.01% to 120% median income. Right now, this grant source has dried up for the moment. But I will say last year after it dried up, they waited about 30, 45 days and they were able to find more funds and drop those funds. So we're crossing our fingers that that happens again. But we're always looking for any grant opportunities that could be available. So now let's talk about some non-QM loan programs. These are programs that kind of don't fit into the box with the pretty bow. It's somebody who fits outside of that. The non-QM, this particular program, a bank statement loan, is designed for borrowers who do not meet the conventional mortgage requirements, often due because you are self-employed or you have irregular income or multiple income sources. So unlike traditional incomes where we are looking at your W-2s, your pay stubs, or your tax returns, these loans are allowed to give us 12 months or 24 months of your personal and or business bank statements to verify your income. So we're looking at the deposits that go into these bank accounts, and then there's a calculation they do to figure out the income that we can use, and it's showing your ability that you can repay this loan. So this particular loan is ideal for self-employed, freelancers, contractors, investors, business owners, whose reported income may not exactly show what it looks like on a tax return, but it's going to reflect on the bank statements. Now we have a DSCR loan, which is a debt service coverage ratio loan. Again, it's a non-QM loan. This is designed for real estate investors. So unlike a regular conventional loan, which would require proof of your income through your tax returns or your pay stubs, this allows you as the borrower to qualify based on the rental income of the property that you're purchasing or refinancing. So if you can't qualify the conventional way, this is kind of like the Band-Aid to be able to purchase the loan using the income that you will receive off the rent. Then we have a foreign national mortgage, again, another non-QM loan. This is designed for borrowers who do not meet the conventional requirements again. It's ideal for foreign nationals who lack the U.S. income documentation or credit history or residency status. Unlike this, conventional loans which require the tax returns, the W-2s, the established credit, this allows us to evaluate your international income, your foreign bank statements, and your global assets to be able to qualify for a mortgage. And then there's the I-10 program. Again, another non-QM. It's created for those who use an individual taxpayer identification number, which is called I-10, instead of having the Social Security number. So what do you need to get started, and what would we require from a borrower? So a pre-approval is when you're completing a residential loan application either online or over the phone with one of your lenders. We take your pre-qualification, and then once we do that, we're going to pull credit and review your credit. We will determine what specific loan program that you qualify for, and we're going to collect and review your income documents, like your W-2s and your pay stubs. We would also collect and review your assets, like your bank statements, to see what your how much you have in the bank, and either your checking, your savings, your IRAs, stocks, bonds, mutuals, 401ks, whatever assets that you have. So the borrower, typically, you're going to let us know like what the purchase price is you're looking at, or whatever your monthly payment is you're looking for, and then we will tell you what funds are required to purchase that home. Your agent is going to understand the buying power of what type of loan you're qualified for, and how long it's going to take you to close. Typically speaking, if everything is in line, we can close as quickly as 30 days. And then your seller is going to be confident that the buyer is qualified to purchase the home that you're putting in on the offer. So that's what a pre-approval is. This is some of the information that we could collect from you. Everybody's situation is going to be different, and some loans require more documentation depending on the can of worms kind of that we have to open up. But when we're taking your personal information, we're looking for your social, your date of birth, your marital status, 2 years of your address history, your phone number and email. And then for your income and employer, we're also looking for 2 years. How long have you worked for that employer? What's your job title? When did you start? We're looking for 30 days worth of your pay stubs or your year-to-date totals. If you have any history of overtime or bonuses, we could be looking for your pay stubs for the last 2 years. So that should really say 24 and 25. And then last 2 years of W-2s or tax returns, depending on what type of work that you do. If you're self-employed, we're looking for how much ownership that you own in your company with your tax returns and a year-to-date profit and loss. For your assets, we're looking for your last 2 months of your bank statements, retirements, 401ks, the stock, bonds, mutuals, whatever you have. And when we pull credit, you're authorizing us to pull that credit so that we can see what your debts look like. If you receive or pay any alimony or child support, we need to know that it's Is it court ordered? How long have you been receiving it to make sure that we can use that? For bankruptcies, there's usually a certain period of time depending on the type of loan, but usually if it's a Chapter 7, it's going to be 2 years past that discharge date before you can purchase, unless it's a Chapter 13 where you're making the payments and then you just have to get the approval process from the judge that you're able to enter into a mortgage while you're in a bankruptcy. And then your housing and property ownership, we are looking at like how long have you lived there? How much rent are you paying? We might need your landlord information to verify your rent. If you own a current property, we're looking at your mortgage statements to make sure you're paying all these things on time and that your taxes and insurance are included. Now I'm going to turn this over to Lori Walder, who's going to talk to you about the renovation financing.
Thank you, Michelle. Hello, everybody. Glad to see you. Michelle gave you a lot of information. We have some great programs at Tidewater, but I kind of want to touch on one that you may or may not be aware of, which is renovation financing. We want to see how we can use it to help build the value in your property, which is obviously one of your largest assets. Renovation financing is basically a mortgage that allows you, say you're buying a house and you found a great area, but you can't find a house that's perfect for you. It allows you to buy the house in an area that you want and let you make the improvements to the house so that it suits your needs. Likewise, if you already own a home, it allows you to make repairs or renovations to a home that maybe you don't want to leave, but it needs to be updated or you need more space or whatever the case may be in your situation. Either way, with renovation financing, you're going to end up with one loan, one payment, and we're going to make the house fit your lifestyle for as long as that may be. Go ahead. What I need you to remember is, in today's market, it's really stressful. If you've not bought a house or if you have in the past, buying a house is stressful. And finding the house that's perfect for you can be really challenging. And in today's market, competition is fierce, especially for homes that have already been renovated. There's many times they've got multiple offers. There are a lot of times they're going for over their asking price, and it's hard to compete in that world. But if you could find a house in the area that you love, maybe it's close to work or family or in a school zone you need, or maybe you want to be, just close to your old neighborhood or what have you. If you found an older home that had great bones in that perfect area, you could renovate it. You could get rid of that 50 or 60-year-old kitchen and update those bathrooms and get rid of the shag carpet and make it look like a newly renovated home and roll it into your purchase mortgage. So it's helping you to save money, keep money in your bank account. You don't have to completely exhaust your savings by buying a house and then turning around and trying to make renovations after the fact. You can do it all in one loan. What I'd like for you to remember is that finding a house, I want you to think of find your area. You can find a house in an area you want to live in, and then we can make it the house that you love for maybe it's the last home you're going to buy, or maybe it's you need one for the next 10 years, but we can make the home what you need it to be for, again, as I said, for as long as you need it to be that way. Okay. So renovation options. If any of you, and I'm sure you've seen them, we've all seen the home repair shows, the Property Brothers or the I don't know, Chip and Joanna Gaines. I used to watch those shows for years, and I always thought, how do these people have 50 and 60 and $70,000 just laying around to pay to get these renovations done? Well, they did it with renovation financing. When I realized that, it was like a light went on. Renovation, it can cover everything. It can do upgrades that people want to make it look good. You can get new kitchens and bathrooms, updated flooring and lights to make the house look brand new on the inside. If you can think about it, we can make it happen. Okay. Next slide. So what the thing is with and people don't realize this, renovation isn't just limited to the easy stuff. It's not just the bathrooms and the kitchens, or maybe you need a new roof. It can be a structural renovation. We have people that are buying homes and they're gutting the interior of those homes. A lot of them are buying the old homes in Norfolk, the old colonials, and they're going in and they're taking out the interior and they're restructuring the way the layout of that house is. And they're making it new on the inside, but it's got all of the charm of the old 100-year-old home on the outside. So renovation will allow us to do that. We can make a one-story home into a two-story home. You can add roofs. You can do foundation repairs, change your whole HVAC system out. Maybe you don't have an HVAC system and you want to put one in. We can update plumbing and electrical. When you're looking at older homes, they were built better way back then. A lot of them have got really great bones, but they've not been updated in a number of years. And this is a great way to find those homes, which typically are not as, there is not as much competition for the older homes. So it allows you more opportunity to win that contract if it's a purchase that you're doing and making the home of your dreams. Okay. We can also do energy efficient renovations. So we've all had the people knocking on our doors wanting to sell us solar panels, which can be very expensive. You can add solar panels to your house under a renovation loan, and you got one loan instead of two. We can update the windows and the HVAC and the heating, all the things that I've already mentioned. We can also do safety repairs. Maybe you've got an old 1950s house and they wired things differently back then. You can go in and change all of the electrical, change out the panels and the wiring and make it all new for safety purposes. And don't forget, some of these houses that were built prior to the 70s, they've got asbestos. Some of them have got mold issues in the foundation. So any kind of remediation work that has to be done can be completed under the renovation programs. And people don't realize this, if you already own a home and maybe you really like your neighborhood, you don't want to move, you love your neighbors, you can take your house. If you've outgrown it, maybe you've got parents moving in, or you've had another baby, you need to add another bedroom. You can update your home that you own currently. It doesn't have to be just a new home. We can do it through a refinance program. You're not limited. The new mortgage would pay off your current mortgage. You would borrow the money to do whatever the renovations are. Renovations are done after the loan closes, and you get the work done and you get to stay where you might love to be. And again, make the home that you loved when you bought it originally. Next. Next slide, please. Did you already do it? No. The other thing that I want to talk about is multi-generational living. That is one of the fastest growing trends in the housing market. And I'm sure you've heard about it. People are bringing families together. Have you heard of these family compounds where they're going and they're buying acres of property and they're putting a house for mom and dad and sisters and brothers and grandparents, and they're all living on the same piece of land. It's just become, the multi-generational living has become a big thing. They're combining households because the rising costs are sometimes more than everyone can afford on their own. Parents are aging. They want to stay close to the kids. They're not ready to go into a senior living house, but they need to be closer to family. Or you've got adult children coming home from college, maybe newly married kids that are coming and they are trying to build their future, and they need a place to stay till they can get on their feet. And a lot of cultural traditions prioritize family togetherness. Everybody's there for each other when it's needed. What do they say? It takes a village to raise children, and you kind of have the benefit of all of that. Renovation financing is perfect for creating those kind of multi-gen spaces. We had a borrower in December that just closed. She has a mother who's been living by herself for a long time, couldn't afford to didn't want to keep making the payments. didn't want to do the work and the yard work. So the daughter and the son-in-law, they took over the major part of the house. They added a big old in-law suite in the back where mom's got her own kitchen and living room and bathroom and laundry and bedroom. She's got her own entrance. And she gets to stay in the house that she's lived in for 30 years, but she's no longer responsible for the upkeep by herself. And that was the benefit. They were there to take care of her when she had surgery. She's got the company when she wants it, but when she doesn't, she just locks the door and nobody can get in. Um, so renovation, oh, can back up for one, if you don't, for a minute. Can you back up one from, thank you. So the other thing is when you are building these multi-gen homes, if you will, comfort and making privacy a priority becomes an issue. And I've had a lot of people ask me, well, how do you keep it private? I don't want my mom walking in the kitchen in the middle of the night. So we've been able to do it by adding private entrances. You can add mini splits for the HVAC so that if someone likes it at 75 degrees and someone else likes it at 69 degrees, one is not freezing out the other. So we can do that. We can add widened doorways and ramps if you've got family members that need the help getting into the house and moving around the property. So, okay, go ahead. And yeah, that's what I said. Yes, renovation financing can do ADA improvements. So if you've got a home, maybe you live in a home now and you're in a wheelchair all of a sudden and you need ramps, we can build the ramps. We can get the doorways widened. We can do the renovations to get you the walk-in showers and the lower cabinetry. All of that can be done with renovation financing. The big thing is to know that just because you're building a multi-generational home doesn't mean you have to be underfoot of each other all the time. You can get the separate entrances. You can soundproof. As I said, you get your own HVAC. And it's there, it's comfortable for everyone, but you don't have to be underfoot. But if you do need help, you've got people there for you. That's kind of the benefit of it. When you consider what it's costing to move aging parents into maybe a senior living or assisted living, it's really, I'm shocked at the expenses, but it's really expensive. That's when renovation financing could become a great option for everybody. It allows everyone to stay close to one another for the support, without breaking the bank, so to speak. I have my son's in Florida, and I'm going to have him build me a detached garage with an apartment over the top. I'm going to Florida at some point. So, but it's an option that can be done. So something to think about. Okay, go ahead. The other thing that's big news is the accessory dwelling units or ADUs. I'm sure y'all have heard about tiny homes. Have you seen anything on social media where people are buying tiny homes and they're putting them in mom and dad's backyards? Um, that's a tiny home is basically it's another property. It's an independent living structure that's on the same property as your own. It works great for guest houses. Maybe instead of an in-law suite, maybe you want a small home as a in-law suite detached from the house completely. It could be finishing out a basement garage or converting a garage that we have already into an ADU. They're great options, and we can do those under some of the renovation loans that are available to us. So go ahead. With the ADUs, the renovation financing, if you're starting from scratch, the funds they're going to cover the construction, the permits, the utility costs, just like it would if you were doing a new construction loan. It's going to basically, it allows you to increase your living space and the value in your house without ever having to move. And again, think of it as an option for generational living. Think of it as rental income. A lot of them can be used for rental incomes. We have a gentleman that gutted a colonial home down across the street from the university in Norfolk. And there was a garage in the back that he fitted, and he uses it as a rental property for students at the university. And it was a great spot for him. So now he's got extra income and it doesn't affect his mortgage in the least. So, also, it's a great place for guests, or if you do have aging parents, if you need full-time care, it gives the caregivers a space of their own without having to live in the main house. Just keep in mind that if this is something you want to do, each city has different zoning requirements, and you would have to check to make sure that the zoning requirement will allow for an additional dwelling or an ADU unit on the property that you're either purchasing or that you own. So just kind of do your homework when you're doing your research. Go ahead. And not everybody knows this, but we offer renovation financing on investment properties. So if you own a renovation, excuse me, an investment property, or if you're looking to purchase one, we can get renovation loans on them. They're available for single family, 1 unit properties. These aren't fix and flip. So I know you've heard, you get these people that go to auctions and they're buying the houses for a very small amount of money, and they're painting it and they're putting new carpet in and they're putting it back on the market and selling it in a month. These loans are not meant for that. These are not fix and flip loans. But if you have decided that adding an investment property to your portfolio is what you want to do, and if you decide to buy one that maybe needs to be updated in order to bring in the rent you want or to bring the attention that you want to it, we can do that. You can update the unit. You can do whatever you want to it under the investment property guidelines. It's a great way to get a marketable product, and still keep your money in the bank instead of having to pay cash for a deal or put money down and then have to use all of the money in your savings account to pay for renovations. You can roll it all into one loan. Okay, next. So the reality of our real estate market today is that competition is fierce. The inventory is low. People are I can't tell you, talk to borrowers all the time that have been looking for houses, and they keep submitting contracts and there's multiple offers going in on properties, and they've, 2 months in, they still haven't won a contract yet. And what's happening is people are starting to feel like they're having to settle. Either they're settling for the area and they're moving further away from where they want to be, or they're getting a smaller home than what they really wanted to get. It's tough. It's tough out there. But they're kind of stuck between, do I buy something now or do I continue to wait and the prices are going to go up? So the renovating is a great option because it helps to get you into a house now. Prices are probably not going to go down a whole lot anytime soon. It helps you get your house now and make it what you want it to be if it's not perfect already. Um, and a lot of the homeowners, people that already own homes, they don't want to necessarily move. It's expensive and it's stressful, but maybe they need more space. Maybe they've just outgrown the house. They need more bedrooms, or they need updates to the house. They can renovate it and solve both problems at the same time and not ever have to leave the neighborhood that they've grown to love so well. Remember, you can buy the area and then stay where you are if you own the house. Find a house that you like and let's make it the house that you love. You don't have to settle in this market. We can find a way to make it work for you. So if you have any questions, thank you for listening to me. And if you have questions, let us know.